Hey everyone, it's Nick with Us versus Herd. If it's your first time here to the content, hit subscribe. If you haven't yet subscribed to our Options Trading Live channel, link is below in the description. I go live Monday through Friday, 30 minutes before our market open. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our Options Trading group on Facebook. Today was a crazy day. S&P's closed down over 7%. NASDAQ was down over 500 points or 400 points, and Dow was down 2,200, and it was the biggest down day we've ever had. I mean, it was crazy. We actually halted at open, and right now futures are rocking. We're up 68 points on the S&P's, 584 on the Dow, and 219 on NASDAQ, which is expected. A lot of times after we have a major down day, the market bounces back up or tries to bounce back up, and right now it is making attempts, as you can see here, it's kind of pushing up towards these daily highs here on the S&P futures. Right now it's currently at 2816, trying to push up in here. Today I only had one day trade. I really wanted to take it slow. I had a really good day on Friday, and because I didn't have any positions on going today, my goal today was actually get some new subs. I didn't think we were going to crash that hard today. However, we did, and I actually only opened up one trade, and let's see here. Yeah, I only had one. I had one call credit spread, got $250 credit for it, and I sold back for $1.20. So only made like $65, but it was 50% of that trade. I'm currently short oil, and I'm short the S&Ps right now. So I'm kind of a mixed bag, but really only down $5 overall. So kind of just chilling, seeing what happens. I have my alert here set for 28.30 on the S&P. See what's going to happen. Right now I'm short again at that 2,800 strike. So we'll see we'll see what happens. Futures did open up down. We did come down to 26.95, and we did bounce back up to almost 28.30. SPY hit 270. It's back up to 282, and as you can see, Apple as well. It did hit 262 and came back up to 273. The reason why the market is up is due to, obviously, Trump. He is saying that he's going to float the idea of payroll tax cuts. He's going to try to help people not miss a paycheck if they take off work. So he's trying to, after he talked down that saying, hey, the flu is way worse than coronavirus, even though coronavirus current death rate is at 4%. He's saying that, he's trying to have some sort of payroll tax cut. We're not sure what it means. He has to meet with the House, kind of talk through the details. Obviously, it's going to be a slow plan. He did approve an $8.3 billion spending for the coronavirus package, so I don't know if any of that's going to include this. They were only expecting to. He did ask for $2 billion. They gave him $8 billion. So, I'm not sure what's going to happen. Also, it's saying that he's with airline bookings cratering. Advisors in D.C. and on Wall Street had widely expected Trump to step in to save companies critical to the economy like United Airlines, Delta, and American Airlines. Travel's way down. Even the CDC says don't go on cruises. Cruises is a disaster right now. So that is why it's up. I don't know if it's going to hold up. And right now, I've said this many times, I'm just trading three things. These are the three tickers I'm trading: ES, SPY, and Apple. I'm just keeping it real simple during high volatility. It's been working. What's been working for me, and things have been going pretty well. On SPY right now, what I'm watching right here, obviously the same as S&P, this 285 level. See if we're going to bounce back up to 285. If it's going to get rejected or not get rejected. The other thing that's interesting to me is today, SPY, it did come down to 270 after hours, but it pretty much bounced right where we pivoted back in June of 2019. Right at 273, we pivoted. We had kind of a downtrend, and then it pivoted right back up through August, back up to 301. So this is going to be, obviously make it or break it for the stock market. I think the best case scenario for bulls, if we get a little chop here, a little consolidation, build some consolidation right down here, a little bit of support, and move back up. It's hard to say right now. The Fed did raise their limits. They are pumping the market up with more with the repo markets, and they're trying to calm things down a bit. They see that their emergency rate cut didn't work. Stock market just kept falling through, and right now it's all hands on deck. They're trying to stabilize the market. They don't want these huge swings in the market because it spooks investors. They want slow, calm waters, and they're trying to do that. So right now, if the powers that be want calm waters, they want to calm things down, and I don't know. I don't know if it's going to work. We'll see what happens. If this level breaks, like the 273 area, I definitely think we have a way better support down in the 260s, as you can see here. We did crash down in December 2018 when we had this panic selling due to the trade war back in December 2018. When December we actually closed the year red. So currently 2020 is a red year, because we started off so high. If we didn't have this run up in 2019 and continue into 2020, it wouldn't be so bad. But because we had this insane run up, this drop is even worse. So if we can't hold this 270 level, 273, 275 level, I definitely think we're going to revisit 260s, and I definitely want to see if 285 is going to be resistance, or if we can get above the 285 area on SPY. So that's mainly what I'm looking for right now. On Apple actually has been holding up relatively well. I mean, they had a crazy run. I don't like where it's at here. I do think that it's potentially going to revisit the 260 area, and it could build some sort of support at 260. If not, I do think this could definitely revisit 220s. Other things that are on my watch list right now, Boeing cratered a lot, and it's back. It's actually below support. Back in the support here was 240, and it broke support. So we'll see if we get a bounce back. But right now, travel, airlines, that whole sector is way down, and Boeing is already going through a rough time, and now they just got hit bad. But I'm not trading it right now, but I am watching to see what happens. I do hold stock, so I'm seeing what's going to happen with Boeing. Thankfully, they still pay dividend. If they start slashing that dividend, we're gonna be in trouble. Also tonight, Stitch Fix reported their earnings, and in this market, and if we do go into a recession, I'm not saying we will. If we do go into a recession, I do think that all these weak companies that are held up by the market with these humongous debt loads, we're going to start seeing them get cut down, start going out of business. And Stitch Fix just got tripped up here and is now currently down at 13. Yeah, 13 right now. So it's below 52-week lows on this, and even below the 2-year. So even below the 3-year. Three-year low is 1448. This is a 3-year chart. When charts get this screwed up, you have to go to like the 3 to 5-year chart to kind of find areas of support, see where things are going to bounce. And right now, for most things, we're kind of in limbo. I haven't been trading earnings, and there's really not many earnings on deck that I really care about until we get to Thursday. So, it's definitely interesting. I kept my risk low today, and I wasn't rewarded. I did make 50% on one trade, but right now I just wanted to kind of feel out the market. When the market changes, you have to feel it out. You kind of have to see how it works. You don't want to just keep jumping in. I look for high probability trades. Some traders look for just big trades, and they try to do random lotto plays everywhere. And then what I try to do is I try to hit my targets. I try to be more precise and I try to hit a higher win rate versus a numbers game with the profit. So some traders are like, well, if I lose 80% of the time, but the 20% of the time I do win, I win big. I don't really like to play that game. I like to try to find precise targets and take my profits when I hit my profit targets. I don't try to run towards the 1,000%, 2,000%. And yes, in the last week we have hit the 1,000%. We have hit the 500% in the last couple of weeks, but it's not a goal of mine. For me, I like to take my profits and redeploy the capital and rinse and repeat, and that's how I make money. That's how, I'm open for business. Some traders, everyone trades to their own personality, and through this, and through losing, I've developed my own type of trading style that I like to trade. One that keeps my morale up, one that keeps my profits up, and one that keeps my emotions in check. And that's how I like to move about the market. So, if you're getting really emotional right now, I suggest even taking a day off. I know that you don't want to because the market's open. You see all these traders making crazy amounts of money, and it's surprising we don't see that many people posting their losses, right? But there's definitely people losing 6, 7, 5 figures, 4 figures, anything in between. People are losing money in this market. You don't want to get too caught up in, why the market is going down or why the market is going up. You want to focus more on the price action, focus on areas of support and resistance, focus on the buyers, focus on the sellers, and try to figure out where the market is headed to next. That's how you make money in the market. If you're thinking about policy and you're thinking about all these things, it starts to clutter judgment. You're not going to make the best decisions for your portfolio. So follow the price action, look at what the price action is doing. Obviously, if there are events coming up, like on March 18th, we do have the Fed meeting. They're probably going to announce a rate cut, so we want to be a little bit more cautious going into the next week. That could pump the market up. The government, the Fed, everyone right now wants to stabilize the market. They want to pump the market. So just be mindful of that when you're laying in short. Yes, I'm short right now, but I'm short very, very, very small. I mean, my positions right now, my maximum risk right now is around $350. So if everything goes against me, my max loss is $350 right now. So I'm not gonna sweat it. I'm not gonna be worried about it. I'll do some day trades and we'll make our money back, and we'll be plus side again on that. So right now, if you're shorting the market like me, just be mindful that a lot of people want to pump the market. Now, if this video was of value to you, I'd appreciate it if you hit the like button. If you watch this video to the end, comment watch to the end. As always, stay safe, stay green. It's us versus herd.